Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. The report heard round the world. Nvidia's much-awaited results fell a little flat with investors.
The street has a pretty good fix on the business now.
Those semiconductors may be tiny chips, but they have a big hold on our tech and our politics. Professor and former White House CHIPS Coordinator Ronnie Chatterji explains.
Both across memory and the most advanced chips, you're seeing the U.S. government make investments all across the board. You can't make your government policy dependent on a single company, and I don't think we've done that here.
Plus, OpenAI is aiming for a $100 billion valuation. And CNBC's Emily Wilkins reports on a divisive proposal in our nation's capital.
A new plan from former President Trump would move 100,000 government employees away from D.C., and that could cost the state of Virginia about $28 billion, according to one estimate.
It's Thursday, August 29th. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Mike Santoli and Robert Frank. Joe and Andrew are off today. We've got some huge news out there. Those big earnings reports from last night definitely having an impact on this morning's market action. As we mentioned, sales...
First up today on the podcast, Nvidia, the most important stock in the world. The hype around the chipmaker's latest earnings report couldn't have been bigger.
Nvidia earnings. Nvidia.
And maybe such high expectations are hard to meet.
Numbers are out, by the way.
Numbers are out.
Nvidia, which provides artificial intelligence chips to the biggest technology companies in the world, reported after the bell on Wednesday. $30 billion in sales versus an expected $28 billion, but 122% growth year over year. That continues a trend of absolutely massive growth. The company announced a $50 billion stock buyback as well. But, and there's always a but, even though this company has been on an absolute rocket ship, the beat wasn't as big as it has been, indicating to some that the speed of Nvidia's AI promise could be slowing. And maybe the rapid-moving adoption of this brave new technology of AI could take a little longer than exuberant investors may hope. The other side of the coin, in all the excitement over Nvidia, Salesforce surprises after the business software company reported a robust quarter as they continue to tinker with AI offerings in the workplace.
And guys, this was not what we anticipated. We didn't think we'd be coming in here this morning talking about Salesforce and the impact it was having because Nvidia was expected to be the big mover. If you look back over the last several quarters, I think the move has been 12 or 13% to either the upside or the downside on any of those reports.
And actually, Salesforce, Nvidia firming up here in the reaction. So we'll get to the details of it, but it seems as if it's sort of serving as a clearing event for the market. We were fixated on it. And Salesforce, obviously a relief, I think. It's had a little bit of a tough run relative to Nvidia in the stock. So it all makes sense. The big picture story seems not to have changed. I think that's what investors are leaning back on this morning.
Just in terms of AI and the demand. And
where it's headed. I mean, we just sort of churned through so many scenarios with NVIDIA leading into the numbers. The stock traded between 99 and 130 in the last month. There's a lot of people had a chance to express positive or negative views on how this was going to come out. And I think the other takeaway is the street has a pretty good fix on the business now. It's not like massive multi-billion-dollar revenue beats or anything like that. It's coming in closer to expectations, but also that means, the growth rates are decelerating.
Coming down to 80% or something from triple digits before that. Josh Brown, I heard him talking yesterday, maybe in the 3 o'clock hour, and he was making some really good points about how it's so unusual because when you see a company with that size market cap, you don't expect big swings like that.
We won't know what this really is worth until we see what Apple does in the space, and it might take 2 iterations. So the definitive answer of consumer use of AI is probably a year to 18 months from now. And then we'll have a really good idea of what this is worth or not worth.
Maybe we're getting to that point a little bit more.
We will eventually, yeah. I mean, look, the options market yesterday was handicapping a 10 to 11% immediate move. Now, it did move as much as 8. It's not like that was so far out of the realm. But that's just one of those what-if trades on either side because the stock is traded so wildly. But again, it's moderating into a little bit more of a manageable growth pace.
It still reminds you how concentrated this market is. I mean, this is a stock that accounted for about a quarter of the gains in the S&P so far this year, and I think a lot of people were Google searching GPU mass and process nodes last night to understand that manufacturing glitch that they had to do to improve yields, and so there's just so much hyper micro focus on every detail because people are used to these expectations being surpassed when they announce.
And it's happened
and they
so
did surpass
fast.
once again.
Yeah, exactly. But the guidance raise was impressive, but a smaller margin relative to the street.
Just such a high
I mean, you just look at the street notes today, and it was beat consensus, fell short of expectations. That's literally what a lot of the notes say, because there's this sort of aggregated buy-side expectation that says, yeah, sure, that's the consensus, but we know they're going to be up here. So,
right.
Yeah. Several tech stocks on the move this morning, as we've been saying. We will start with the details on Nvidia. The anticipation, of course, was building all day, all week. The numbers from the AI chip maker released around 4:20 p.m. yesterday afternoon. So here are some of the highlights. Profits and sales, both topping expectations, as we said, exceeding consensus. Revenue grew by 122%, topping $30 billion for the quarter. Data center revenue up by 155%. Gross margins edged up slightly. The company also providing stronger than expected guidance for the current quarter and announced a $50 billion share buyback as well. As for Nvidia's next generation AI chip, Blackwell, the company expects several $billion in revenue from Blackwell in the fourth quarter. CEO Jensen Huang on the call last night.
The data center worldwide are in full steam to modernize the entire computing stack with accelerated computing and generative AI. Hopper demand remains strong, and the anticipation for Blackwell is incredible.
As you can see there, the stock bouncing around when the numbers first hit. The stock trailing off right now in negative territory, but down only 1.6%. Year to date, Nvidia shares still up 150%. The market cap dipping below $3 trillion briefly, but I think right now we're probably right back around that $3 trillion mark. So, huge numbers we're dealing with here. And, just for scaling purposes, 2 years ago, $26 or $27 billion in total annual revenue. Okay? This year it's going to be $125 billion. So $100 billion in incremental annual revenue over 2 years. Now that's of course going to decelerate. Yeah. But they're having, you mentioned the production issues. People are going to have to adjust their timing for the next generation, and maybe a little bit of margin pressure in the fourth quarter related to that. So that's just flowing through to the numbers. But I think the takeaway is it's fine. I mean,
and some people were saying if it weren't for the Blackwell delay, you would be seeing numbers right in line.
You'd still be in that acceleration mode, possibly.
Exactly. Yeah.
All right, another big report getting overshadowed by Nvidia was Dow Component Salesforce. As we just talked about, the stock is moving higher this morning. Second quarter results beat the estimates. The company also raising its full-year profit outlook. CEO Mark Benioff telling Mad Money last night the quarter and the outlook is all still about AI.
We're just in an incredible new environment. And I think that the technology is like nothing I've ever seen before. And every company understands, because they're using these new AI models at home or personally. But now we can really show how they're going to get value for their companies.
Salesforce also saying its CFO, Amy Weaver, will be stepping down, but will remain in her position until a successor is found. So good news there for Salesforce.
Yeah, and I think the Dow this morning, 92 points about of the upside to the Dow futures this morning coming from Salesforce. Thank you, George Manises, who's telling me this right now, too. So we'll keep an eye on that, up by 5.25%.
And this is an interesting story. Another valuation jump for OpenAI. CNBC has learned that the startup is in talks to raise billions of dollars in a new funding round that could see the maker of ChatGPT valued at more than $100 billion. It's like 3 times what it was a year ago. Venture capital firm Thrive Capital, that's Josh Kushner, is leading the round and will invest $1 billion. The Wall Street Journal said Microsoft, which is, of course, OpenAI's biggest backer, is also participating in the round. OpenAI, Microsoft, and Thrive Capital have not commented. Earlier this year, OpenAI was valued at a reported $80 billion. They had seen some share sales by employees a few months ago at $110 billion. So not entirely a surprise. But at some point, you have to figure this sort of nonprofit profit structure is going to change given the valuation and how much more money they're taking in. Thrive Capital's investors will want to see some kind of long-term structural change so that they know that their profits are safe in the long term.
You have the Microsoft position in there. It's sort of unclear. You're going to have investments alongside Microsoft. Is OpenAI kind of just servicing back to Microsoft products? Obviously not. So it's tricky how they're going to navigate.
And Microsoft now has so many frenemies in this space where they're kind of hedging their bet. They look, we got OpenAI. Right. We're also doing our own thing with some former AI people, and we're working with other companies. So it's an interesting ecosystem because no one knows who the winners are going to be and what the valuations are going to be a year from now. So
I mean, the other issue is you have the worry about what regulators will do. And the worry, I say, from the companies that are looking to profit off of this and the investors who are looking to profit off of this, probably telling part of the reason that Microsoft would step down and give back those board seats that they kind of demanded when OpenAI went through its crisis period last year and then came back to see what happened with some of these things. They had to give back the board seats because you have regulators who are looking at this saying that this is no longer the structure. We're already at the profit structure.
Well, and there's the antitrust issue. There's also the regulatory issue that's emerging now. California Assembly last night passing that AI. We're going to talk about that later. But that's also, going to change some of the competitive dynamics because the newer firms like Musk's firm, they like this because it sort of hurts the leaders right now. So both on the antitrust and what governments, both on the federal and state level does, fast-moving changes.
It is. We should also mention that Warren Buffett is now in the $1 trillion club. Berkshire Hathaway reaching that market cap milestone during yesterday's trading. And this comes just before Buffett's 94th birthday. That's coming up. 31st of this month, we'll be watching. The stock has added 28% so far this year. This has been pretty phenomenal because every other company, the other 6 companies in the $1 trillion club, are all mega cap tech companies. This is the first old economy company to be able to do it. There are so few conglomerates that are around today. This is the first conglomerate that's been allowed to do it.
It's a good birthday present.
It is a good birthday
$1 trillion company.
I mean, this market is still, for all the hype and everything around AI, it's still rewarding quality. In other words, great balance sheets and reliable earnings. Of the $1 trillion, I don't know, 300 billion of it is the public stock portfolio,
right. Of which
275 is cash.
Right.
So, there's plenty there in terms of substantiating it. Of course, he's been pretty aggressively, he meaning perhaps it's Buffett.
Its birthday is the 30th. It's tomorrow.
Tomorrow.
Right? Yeah, it's tomorrow.
94 tomorrow.
Yeah.
And, trimming back the Apple and Bank of America shares, doing a lot of pruning of this portfolio.
Well, and there are lots of questions about why. It's more than $275 billion in cash that they're holding at this point. That's a huge amount. Obviously, as the market cap has gotten bigger, as their assets have gotten bigger, it's not as massive as you would have assumed at one point, but that is a lot of money to put to work. There are people who suspect that it's because he thinks there's a downturn coming in the economy. You can wonder about what might happen down the road with any potential tax changes on anything. There's lots of things you can look at for this. But Joe was saying yesterday, and I thought it was pretty interesting and insightful, just the idea that he's going to be looking at this thinking, when I'm 95, 96 years old, something happens, we're going to have the cash.
Yeah, I mean, you obviously have the ability to maneuver. Also, we know he doesn't see great, compelling value surfacing in this market.
Right.
So we know that piece of it.
Right.
I also think that when it comes to, there's no need to have a 12%, 14% position in Bank of America. I think he just wants to reduce the outsized bets within the portfolio and create room to operate for himself or whoever comes down. I mean, this is a really a huge cushion within the company for whatever the next move might be.
That's true.
Cheese will be next.
Up next on Squawk Pod, Nvidia may have today's headlines, but semiconductors across the board are at a pivotal moment. Ronnie Chatterji oversaw the implementation of the White House's $52 billion CHIPS Act, and now he's a professor. He's explaining America's tech strategy right here.
The fact that we're building these things in the U.S. and world-leading companies like TSMC, Samsung, Micron, SK Hynix, and others are building here in the U.S., that sends a powerful signal in terms of the balance of power in microelectronics.
Welcome back to Squawk Pod.
Robert, you ever think about a column called To Be Frank?
To be frank, or frankly speaking.
Frankly speaking.
Do that too.
Yeah, a lot of them.
Although often when somebody says to be frank, they're actually not about to tell the truth.
Right.
I'm always frank. I am
That's right.
always frank.
No offense, but It's the same thing. All right, you are watching Squawk Box right here on CNBC. I'm Becky Quick along with Mike Santoli and Robert Frank. Joe and Andrew are off today. Nvidia shares lower in the pre-market. That's coming despite beating market expectations, which remain sky high for this company. The stock, as a result, too, it's off just slightly. For a broad look at the chip sector right now, including Intel's recent struggles, we want to bring in Ronnie Chatterji. He's the former White House CHIPS Coordinator who oversaw the implementation of the $52 billion CHIPS and Science Act. He's now a professor at Duke University's Business School. And Ronnie, thank you for being with us today. Why don't we start off just with Nvidia, what you think this tells us about AI and the demand for AI and the promise?
Well, sure. I think, despite what's happening in the pre-market, we're seeing really strong continued demand for AI infrastructure. The hyperscalers are continuing to spend tens of billions of dollars in capital expenditures on building out infrastructure to support AI. And most of the hyperscalers are saying they're worried about underinvesting, not overinvesting. So while Nvidia or no other company can overcome these great expectations, I think we're very strong still in the AI infra space. Continue to see a lot of tailwind in that area going forward.
And yet we have Intel, which doesn't have the AI chips that are so in demand at this point. That stock dropped by 25% earlier this month when the company came out with very disappointing earnings that kind of shocked the street. They said that they're going to be laying off 15% of their workforce. How does this happen to a company that just received $8.5 billion from the U.S. government in grants, another $11 billion in loans, to try and make sure that it's doing things like keeping us ahead in national security and creating jobs?
Well, for Intel, that money has not been allocated yet. They had a preliminary award, and they're going to have to earn it with milestones on construction, on technology and product roadmaps. And I say, look, Intel is trying to catch up in the AI space. Pat Gelsinger said that recently. They're ramping up production of their AI chips, and that's what really hit margins this past quarter. From the U.S. perspective, though, they've made a diversified bet with the CHIPS program. When we set this thing up, we realized that we couldn't bet on a single company or a single technology, and that's why you see 5 different companies in the most advanced technologies all investing in the United States of America. So that diversified bet is going to protect American taxpayers, regardless of the fortunes of any individual company.
Let me ask you, there are real questions, people asking what happens if Intel gets smashed and goes away? Would the U.S. government allow it at that point? Are you going to pour more money into this company?
Well, for me, I can't engage in that hypothetical not being in the U.S. government anymore. But what I will say is, look at some of the programs and the support that's already been announced. TSMC is building in Arizona in advanced nodes. You have Samsung building in Texas. You have Micron. You have SK Hynix on the packaging side. Both across memory and the most advanced chips, you're seeing the U.S. government make investments all across the board. You can't make your government policy dependent on a single company, and I don't think we've done that here.
We have been really slow, though. This CHIPS Act was passed 2 years ago now, and it's now larger than the latest rollout of Chinese funding, and yet it's been so slow to try and see any of the build-out of fabs. Is that because we've been slow at enacting this? Is this part of the plan? Is it because it's so hard to build some of these fabs? I mean, where do you see us getting to the point where you think the CHIPS Act has accomplished what we set out to do?
I think we're on our way. I mean, yes, 2 years from the bill, we've now seen $30 billion has already been announced in terms of preliminary allocations. Why is it preliminary? Because we have to make sure that the companies are hitting their milestones so they can build what they say they're going to build. The taxpayer would demand no less. So I think for a complicated project like this, supporting fab construction that will take years, equipment that's very complicated, and a market that's very cyclical, I think this kind of pace is on track. I also think when you look at the Chinese efforts, to be frank, this is the 3rd round of their so-called big fund, and it hasn't necessarily delivered the kinds of gains on the most advanced technologies that you would have expected. So I feel like we're in a good place. A lot of difficult challenges to unwind, but I still think we're in a good place given 2 years since the bill was passed.
Why do you think we're going to do it better than the Chinese have to this point?
I think if you look at the record up to this point, we have all 5 of the companies on the most advanced technologies, both in DRAM and logic, building here in the United States. No other economy in the world can say that. So when you look at that picture, we have the best chance to succeed in what the chip ecosystem is going to be 5 or 10 years from now. Remember, when we did this program, we didn't even think about how big AI was going to become. And if we didn't do this program, imagine where the United States would be, not making a single chip to power AI in the United States. We're going to make sure now we're going to have over a quarter of the most advanced advanced chips in the decade made here in the United States. So I think we're on track. Definitely a lot of challenges. No one should get confident or cocky, but I think we're on track and hitting our milestones.
Ronnie, going back to your point, you mentioned that Intel hasn't received this $8.5 billion yet. They have to earn it through certain benchmarks. If they don't, what happens to that money? Does it get returned to taxpayers? Does it get redistributed to these other chip makers that you talked about? What's your guess?
Yeah, I think first we don't have sort of public confirmation on what all the specific milestones are. I imagine they'd be construction milestones, product and technology roadmaps. And if any company doesn't hit those milestones, then the taxpayer dollars will be clawed back if they're already allocated, or if they're not allocated yet, they would be distributed perhaps to other companies as part of the program. I think it's about achieving the goals of the program. And so if you could do that best by investing in other places, that's what's going to happen. But we still haven't seen that yet. And I think we have to wait to see how Intel performs going forward to see what's going to happen. And that goes true to every single company in the program. There's been over 15 big awards, so we're going to have to watch all these companies that are in progress.
A big part of the reason that this was able to pass Congress is the concern of our complete dependence on Taiwan for all of this chips manufacturing at this point. How long do you think it will take until we can say we're not so dependent on Taiwan? National security issues.
I think you'll see the money start flowing very, very soon. But of course, to build the fabs and build up that capacity, let's say in the most advanced nodes, the ones that drive artificial intelligence, training and inference, that's going to take a couple of years to actually produce at scale. But the fact that we're building these things in the US and world-leading companies like TSMC, Samsung, Micron, SK Hynix, and others are building here in the US, that sends a powerful signal in terms of the balance of power in microelectronics. So it'll be a little bit before we actually can produce these chips at scale. That's just a business reality. But the fact that we're starting and we have the biggest companies in the game, that's a really important signal to the rest of the world.
Ronnie, thank you.
Thank you.
Coming up on Squawk Pod, a plan from former President Trump that could cost the state of Virginia $28 billion and maybe change the makeup of the House of Representatives. CNBC's Emily Wilkins is on the ground at a commuter hotspot outside the Beltway.
Trump isn't proposing a cut so much as a move away from the D.C., Virginia, Maryland area to other areas of the country.
You're listening to Squawk Pod today with Becky Quick, Robert Frank, and Mike Santoli. Here's Becky.
Republicans have proposed trimming the size of the government, and former President Trump is proposing even deeper cuts if elected. But those cuts could mean losing a key seat in the House. Emily Wilkins joins us right now. She's got more on that story. Hi, Emily.
Hey, Becky. Well, I'm here today in Stafford, Virginia, where this parking lot is filling up with federal workers who live here and then take the bus or carpool up to D.C. Federal employees and government contractors, they're a key part of the economy here. But a new plan from former President Trump would move 100,000 government employees away from D.C., and that could cost the state of Virginia about $28 billion, according to one estimate. The proposal is facing a pushback from a member of Trump's own party, Derek Anderson, and he's running for Congress here. Now, both the GOP and Democrats are targeting this House seat, which will be key to who controls the chamber next year. Anderson told CNBC in a statement that he will oppose any legislation that could weaken national security, raise the cost of living, or hurt jobs in the district, regardless of where that comes from. Going door to door to talk to voters, Democratic candidate Eugene Vindman said he hears from a lot of workers who are worried about Trump's plan.
It would be devastating to this area. First of all, fundamentally unfair, but devastating to this area because you're talking about thousands, tens of thousands of pretty well-paying jobs. It would be horrible.
Whoever controls the House next year will have a big say in government funding and whether or not the federal workforce expands or shrinks. Guys?
You know, Emily, that's always the issue, though, right? It sounds like a good idea to cut until the people who are going to get cut find out about it and come through. It's why governments tend to not shut or close, or why government spending tends to not get put down. This seems like it's going to be a battle we're going to see again and again.
It absolutely could be. I mean, this isn't certainly the first time that you've heard a proposal from Congress about cuts, but the fact is that it's harder to do to actually eliminate some of these jobs and some of these agencies. I think one of the interesting things to keep an eye on is that Trump isn't proposing a cut so much as a move away from the D.C., Virginia, Maryland area to other areas of the country. That still, of course, would take a number of logistics, but his idea kind of here is to take some of those employees, move them elsewhere. So we'll see what Congress does with that.
For sure. Emily, thanks so much.
All right, folks, that does it for us today. Guys, thank you very much both for being here. It's been fun.
And that's the pod for today. Thanks for tuning in. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Big thanks to Robert and Mike for their work today. You can tune in weekday mornings to CNBC at 6 Eastern, or get the smartest takes and analysis from our TV show right into your ears when you follow Squawk Pod, wherever you get your podcasts. Thank you. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.